Greetings from the Charter School Office. I'm Albert Birch, I'm the Finance Specialist for the office. So this sheet is essentially a review of the audited financial statements with a couple calculations and some information from SEPI included, which I'll go over as I continue through this video. So first, it's important to realize that this sheet is much easier to compare from year to year than the thick audits, so that's why we kind of created it. And it's also a better means of discussing things from year to year for our office, what relating to renewal and other things. So this is kind of our tool that we use. We've tried to bring it to the boards in the annual report in years past, so this is kind of that piece of the annual report taken out as a standalone because of the differing dates for the financial piece versus the academics piece. So we're hoping that you enjoy this delivery method over the regional board training. So that's this is just something new we're trying out. So let us know if you have any feedback. So getting into the sheet, these are all derived from the audit, so I'll show you that. So we have statement of net position right here, and then as an example, we'll look at total assets. So total assets are $533,528. So we'll go to the audit. Here's the statement of net position, and then total assets here are listed at $533,528. So if you wanted to verify all those numbers, you could do that. For time, I won't get into that, so we'll go back to our sheet. At the bottom, you'll see ending net position and previous net position. So ending net position is the June 30th, 2014 ending net position, and the previous net position is the net position at June 30th, 2013. So this lets you compare from year to year, and this will show that there was actually a decrease in net position from 2013 to 2014. So below that, we have our balance sheet section. So here's our general fund current assets. So these are going to be our assets in the general fund. And then over here is the general fund classification. So I'll go back to the audit for a moment to show you where this is from. So the balance sheet is 2 pages after the statement of net position. So 1, 2. There's balance sheet. Now the important thing to note with these numbers is they're in the general fund. So make sure you're sticking in this column. So if you have other food service funds, debt service funds, whatever, make sure you stick with this column. So here's our assets, and then below, down here, a little below, is the fund balance classification. So we have non-spendables, prepaid, and then unassigned. So we'll go back to our review sheet for a moment. So here's the assets, and if you'll notice, the prepaids are $19,058, and then over here you'll see that non-spendable. So usually there's an association between prepaids and non-spendable amounts. So non-spendable amounts are amounts that cannot be spent because they are either not in spendable form or are legally or contractually required to remain intact. So that kind of fits the description as to why it's not spendable if you've already prepaid something. So moving up, you'll see the unassigned amount. Unassigned are amounts that are available for any purpose. These amounts are reported only in the general fund. So that's kind of the one we look at as a good indicator if there's some unassigned amount. So there are other classifications, but I won't get into that. They aren't part of Dream Academy's classifications. So if you wanted to know these definitions, though, they're directly from the audit. So coming up here, before we go down, this section is a summary of the activities. So there's the beginning general fund balance, the revenues, expenditures, other financing sources, net change, and then ending general fund balance. So I said that kind of quick, but this basically summarizes everything that happens in kind of a broad perspective. So page 2 takes this box and breaks it out into more details. So we'll get into that. So below that we have a couple calculations. So general fund divided by revenues, that takes the ending general fund balance divided by total revenues, and then below that you have general fund minus restricted, which does the same thing, except if there was a restricted amount down here, we would subtract that first. Now it's important to look at this because if it trends upwards, that means there's more reserve in the general fund as a proportion of revenues to cover financial needs, whatever that is, a leaky roof, whatever. So that's kind of what that is an indicator for us. We like to see that around 10%, but it's not, I don't believe it's in the charter contract. That's just kind of an indicator that we look at. Now if you looked at the last state aid update report, that said that one of the governor's indicators that he looked at was the general fund divided by expenditures. So that's why this is included on here. Some people at the state prefer this. We like to look at this. The reason why we prefer revenues is the expenditures can be kind of skewed if you have a large capital outlay. that can kind of skew that number. So we think it's important to look at both of these and understand why one is kind of different. So that's what that is. And again, this is just the general fund divided by expenditures. I don't know if I actually explained it. It's just the ending general fund divided by total expenditures. So and then ending general fund divided by beginning general fund takes the ending general fund divides it by the beginning. Now, if this is below 100%, which it is, there was a negative net change, and if it's above 100%, then there was a positive net change. So that's kind of what that indicates. So as we scroll down, this section is a table, the numeric display of the note section of the audit. So you'll notice that this long-term debt section has zeros by it. That's usually classified as any bond financing, long-term financing in that respect. So kind of meant to any financing that's building related. So Dream Academy utilizes the lease, and that's why their leasing information is right here. So this information is the state aid note information. So you'll notice that it shows a zero balance at June 30th, 2014. The auditor didn't provide much detail in the notes. I probably could have gone and looked it up, but I just wanted to point that out, that the auditor, I believe, said that it was paid off by August 20th. So we know that it's paid off. It may not have, the balance probably wasn't paid off at June 30th, 2014, so don't be misled by that. But the balance is paid off as of the audit date, as of the audit statement. So just so you know. Down here, this is the capital operating lease section. This would be the financing of the building if it wasn't a bond, which that is the case. So that's what this is, the lease payments associated with the building. Over here we have the management fee section. I have a little note here that says that this includes both the $238,261 and the federal grant expenditures of $16,234. So I added the two. If you look in the note section, which is on page 4 of this sheet, or in the audits, you'll see that there's actually two numbers relating to EMO fees. So I just added them together. So I just wanted you to know that. Percentage of state aid, this takes the management fees and then divides it by the total state aid down here on the next page. So that's what that is. Earned divided by fall 2013 takes the management fees and then divides it by the fall 2013 count, and that's what that is. So below that you'll see total square footage. If this is incorrect, let us know. We'd like to update it, and if it's incorrect, it will affect a couple of these formulas. So if it is incorrect, we can update it and quickly send you this sheet back, and it will automatically update everything. Everything's a formula. So over here we have revenues per square foot, and then expenses per square foot, and the difference. Now, if you notice, they're whole numbers. There's no decimals, so there is potential for rounding error. Just so you know. Now, payment per square foot takes the total lease payments and then divides by the square footage. So that's a little different from these other calculations. And then this $15 is the average for our Bay Mill schools is $14, so that's pretty in line with the average. And then over here, operations and maintenance per square foot takes the line item down here, operations and maintenance, and then divides that by the total square footage, and that's $29. The average for Bay Mill schools for that line item is $18, so that's kind of high in respect to that for whatever reason. So, and then square footage divided by fall 2013 takes the total square footage and divides it by that fall 2013 count, which is the corresponding count for this fiscal year. So, just a couple calculations to look at from year to year and try to help you ask questions and assess where the school's at. So, right here we have the actual as of June 30th, 2014, actual as of June 30th, 2013, and then the difference. So this lets you compare from year to year really well. This is the detail of that little box on the top of page 1 up in the upper right hand corner. So this is the breakdown. If you wanted to know what any of these things are, I'll show you a little trick. I took the accounting manual, put it in Microsoft Word. You push the find button in the upper right hand corner. I believe this is Word 2013. And then type in what you're looking for. We'll use basic programs as an example. Make sure you're on results. Then you can kind of skim through this document. So you can move through and see where that's at in the document. Now, you can't type broad searches like instruction or something like that. That's going to say there's too many. But if you focus your search, you can find things pretty quickly. So if you want to know what basic programs are, here's the accounting code. And then there are instructional activities, including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. Includes pre-kindergarten. And it goes on, and you could read some of the other designations underneath that 11X classification if you wanted to. But I won't get into that for the scope of this presentation. But just know that you should understand what all these things mean, and you can find the answers pretty quickly if you use that tool. So again, compare from year to year whatever you're looking at, just side by side like that, so it's a good comparison. And then this ending general fund balance should match up to that box in the upper right hand corner of page 1. So moving down here into the budgetary comparison, this is the original budget, the final budget, the actual. This is from the audit too. The budget difference is the difference between the actual and the final, and then the percent change is the percent change between the actual and the final. I have this note here. This is stating that the original budget is due July 1, and it's a reminder to myself, others in the office, and everyone who sees this note, I guess, that the original budget is due July 1, which is well before the fall count and before the school year, so there's sometimes a discrepancy between the original and the final budget, so that's just kind of a reminder. So below that, we have our instruction as a percent of revenue. So you'll see that this is kind of trended upwards. I'll show you what it's actually computing, so we'll scroll back up here. So this takes total instruction and divides it by total revenues. So you'll notice that revenues did go up by 39,812, and instruction kind of went up by 20,595. So at first you may think that should cause a decrease, but you got to know that it's proportionate to the total. So this going from this to this is a bigger proportional increase than going from this to this. So it's kind of not meant to be an absolute, but a good indicator to look at to show you. Now another thing is, another example that kind of could impact this that could be kind of misleading is if you have a teacher that resigns, retires, or whatever, who is getting paid $50,000, and he or she is replaced by a teacher that only gets paid $30,000, you would essentially have a decline in those expenditures while not necessarily offering less instruction. Now we could get into the argument about quality, but this is kind of supposed to be just relevant to the numbers. So just know that if there is a decline like that because of a teacher or something like that, you could say, why did this happen? And then they could say there was a new teacher hired, blah, blah, blah. So just kind of meant to be thought-provoking as an indicator, not as an absolute. So revenue is divided by fall 2013, and expenditures divided by fall 2013. Take the total revenues and expenditures and divide it by the fall count. Now you can compare this from year to year, and it would be good to look at just as an indicator to see how things are trending. And then if there's a large capital outlay, you could have a large skew in this number, just so you know. And then the difference. Now page 3, this is the enrollment page. These numbers are derived from CEPI. So there's so many acronyms in education that I thought I would show you what CEPI means. CEPI stands for the Center for Educational Performance and Information. It's a state-operated site, and you can get a lot of data from it. So to find these numbers, you go down to My School Data, you click through a couple filters, and then you go to student count for these numbers. We're also, underneath this is the free and reduced lunch counts, and if you want to look up special education counts or anything else. So then these are large spreadsheets with a lot of schools listed in them. It goes down to 91, 92. So I dug in those spreadsheets for you and dug all these numbers out. So if you notice I didn't highlight the last one, this number is actually an unaudited number we received through Epicenter, which Epicenter is the file retrieval system that communicates between the school and the charter school office. So this number is on the sheet that was the DS 4061 sheet. And again, that was unaudited, so it's subject to change based on what the audited number is. So it's important to know that. And then over here we have our percent change. So this is the percent change from count to count. So these are for our numbers people. Below that we have the graphical display of the count. So for those who are visual people, we have a visual display of the data. And then if we scroll down a little bit more, this is our free and reduced lunch counts. These are again from SEPI. Just change that filter like I showed you. And then this is the percent free and reduced lunch count. So this takes the free and reduced lunch count, divides it by the total fall count, and then that's where the percentage is derived from. And then below that we have just a portrayal of the count data, so for the visual people. Now page 4 is the note section. So this is derived from the audit again. So page 24 is where you could read about the operating lease and all that information. SAAN stands for State Aid Anticipation Note, and that's on page 25 of the audit. I mentioned up in the on page 1 that this was really short, so you'll notice it's only 2 sentences. That's why there wasn't a lot of detail. And it says it was paid in full by August 20th, 2014. So normally there would have been a balance, but I didn't know what that balance was based on the auditor. So that's why it's listed out the way it is. But just know that it was paid in August 20th, 2014. So that's the debt section. Management company note. So this will tell you the information that's from the audit about the management company. So page 25, that's where this is from. And then again, you can read that. I won't go through all that. And then there was no findings, which is good. And then anything else that isn't related to management or debt, I put down here. And then this is just another note, page 8. So talking about the decrease in that position. So if you have any questions, my email is albertb@bmcc.edu. This was reviewed before I sent it out. So again, let us know if you have any feedback, any questions, comments, concerns. Let us know. We hope you enjoyed this delivery method. It's a little different from the regional board trainings we had last year, so we're interested to know what you think. So we thank you for all you do for the children of Michigan. Have a good one. Take care and stay warm. Bye.